All right, real estate wealth builders. I've been getting a lot of questions about this 50-year mortgage. It's all the buzzword all over the place. So I thought nothing flashy, nothing glamorous, nothing crazy. I'm just going to show you guys really quick why a 50-year mortgage may sound great and like, wow, things will be so much more affordable, but is it really? And the best way to do that is to compare a 15-year mortgage to a 30-year mortgage and then extrapolate that relationship into the 50-year mortgage. So here we go. All right. So if we look at this here, the average, or excuse me, the median home sales price end of October 2025 is 900,000 in Seattle. That's what I'm using as an example or as a model. If you put 20% down, that's 180. Loan of 720. I'm doing this here at a 15-year loan rate. All right. So this is a 15-year loan. Usually those interest rates are a little less because it's less risk for the bank. If you do a 15-year loan, your payment's going to be higher than a 30-year at 5,883 for principal and interest. But here's the kicker, guys. Look at this right here. Total interest 338,940. So keep that number in mind right there. 338,940. Now let's compare to a 30. Okay, so bankrate.com says a 30-year mortgage is about 6.5%. So that's all I changed here. The term, 30 years, 6.5%. It's a little bit more risky for the bank because it's a longer period of time. So they bump the rate up on you. So what's that going to be in interest paid on the property? Your principal interest is going to be 4,550, so a little bit less. But look at that. You're paying total interest $918,000. Holy biscuits. You don't own it until 2055. All right. For all you gamblers out there, let's look at a 50-year. Okay, so I've extrapolated the same relationship. Remember, this hasn't been offered yet, so we don't know what the relationship will be. But if we take the 15-year to the 30, if we take the 15-year to the 30-year ratio, it's going to be 7.5%. Here it is right here, 50-year term. So your principal and interest payment is going to be 4,600, and your interest is going to be 2,045,808. And it's going to take you 50 years. So are you going to ever live in a paid off home? Are you going to have to set up a mortgage that's transferable to your children, maybe your grandchildren? So this could be adjusted or changed by the government to make it make a little bit more sense. But either way, who wants to pay 900,000 for a home, let alone if you take the 900,000 in principal and you add the interest of 2 million, you're paying $3 million for that $900,000 home. Make it make sense. Early adopters of a 50-year mortgage might be able to be competitive in the marketplace, but just like the minimum wage, markets adjust. So people care about affordability. If a minimum wage worker gets paid more, they're able to spend more on things, so prices go up. Same thing here. If people are able to get a longer mortgage, the amount of home they can afford will go up. So therefore, the prices of homes will go up. But in this case, not very much. Really, this is a huge win for the banks because of the millions of dollars of extra interest that you're going to pay. It's really not a win for the consumer. So my vote for a 50-year mortgage, in most cases, unless there's something that they do artificially supplementing it with taxes or something, or going into more debt from the US government, it's not going to make any sense. So if you're waiting for a 50-year mortgage and think, hey, I'm going to finally be able to afford it, it's either the market's going to adapt to it if it really makes a difference, or you're just going to pay more than 3 times what the property is worth. So yeah, the more you know. It's all math. All right. Let me know your thoughts and down in the comments below. Did you think it was going to be better than that? Did you think it was going to be, oh wow, this is the next best thing, or were you kind of suspicious? Curious to see what you have to say below. All right, stay strong, wealth builders.